inside the noise.
Hi guys, what is going on? What is Gucci gang? Chat. Hope you guys had a good weekend. Let's see. Hope you guys are staying warm today. Jeez. It is in the 20s today for me. And we had the same number of viewers as the temperature outside. So, yikes. But I got a lot done the last couple of days, I must say. Quite a bit. Oh, excuse me. I'll go over that and a few other announcements I have for you before we get into it. So, anyways, what's good? Eric, Roberto, Tordy, Jorks, Oscar, Felix, Fluffy White Streets. Have you stepped out this weekend? I did walk outside yesterday for probably 20 minutes, maybe 25 minutes. And I put the car cover on and I noticed that there was a pool of water in the by the trunk. So I had to like sweep all the water off. And that was the extent of my outside time. It was good. Ebernet 2020, Mason, Slowly, Monkey, Adam, AJ, Julius. Foot of snow in Pennsylvania. Ugh. Gross. Gross. I don't know what to tell you, man. Shovel. Get a shovel. Shovel that shit. Yeah. I don't know. I don't care for snow, to be honest with you. I do not care for that at all. Okay, so for the announcements that I have for you today, it's not a lot, but the first thing, no particular order of importance here, but the first thing is a few days ago, I started Amusing Ourselves to Death by Neil Postman. I finished that last night. See that? Amusing Ourselves to Death by Neil Postman. Finished it. It's a banger. It's a little old. It's about 40 years old. It was first published in 1985. It was written in 84. So just about 41 years old. It's really good. So if you're writing down stuff that I read, there it is. And if that sounds familiar to you, is because Neil Postman is also the same guy who wrote Technopoly. This was the first book that I read this year. I want to say Technopoly came out like 5 or so 7. So this came out in 1992, right before I was born. So Technopoly came out about 7 years after Amusing Ourselves to Death. I read them backwards. I don't really think it matters in the order. There it is. I'll go out of order of my notes. Our current book of the month, right, is How to Read a Book by Adler and Van Doren. This is your last week. Okay. This is your last week to catch up on that. Okay. Today is the 26th. So we're right here. Right. So you should be on part 4 or the last 2 chapters by now. And this is our last week of January. This is our last full week, basically, minus yesterday. The next few days to get that finished. So, are you guys done with it yet? Is anybody actually done with it yet? You finished all 21 chapters. There's 36 viewers. Do we have at least one person that finished already? Or do you need a few more days? You shouldn't be behind. We spaced this out very well. Well, we spaced it out as much as it could be spaced out. Roberto says few more days. Fine. I guess we'll revisit this on Friday then, when we have our discussion. Okay, let me ask you this then. If you're not finished with it, tell me what chapter you're on. What chapter? There's 21 chapters, right? What chapter are you on? If you're not done. All right. So, since this is the last week, that means we are getting ready to start next month. So if you have not ordered this already, if you have not gone to either thriftbooks.com for a used copy, Amazon for a new copy, maybe a used bookshop or something, How Successful People Think by John C. Maxwell is book of the month for February. Is for February. So you got a week to order How Successful People Think, while also finishing up the last few chapters of How to Read. Just finished part 3. Oscar's on 16. Eric's on 17. Yeah, the mathematics. Yeah, see, that's... Chapter 6, you have my permission to skip 17 if you don't like it. Okay, probably 18 as well. Those later chapters were just... Ugh. But 20 and 21 are great. But like 16, 17, 18, 19... You have my permission to skip those, honestly. Book of the month for next month came in yesterday. You see, Julius, that's what I like to hear. We need more of that. We definitely need more of that. I got a couple more, but I guess I'll save those for later. Last night in Discord, I shared a chart of Nasdaq, and we were not in the 870s. I don't remember what we were even at. But I did say that I didn't really like where we were in the range, but I still pointed to what? What did I point to? What did Captain Hindsight point to? What did Mr. Hindsight point to yesterday? Right? Last night, what did I point to? Higher pricing, baby. Come on. Higher pricing, Felix. That's correct. Number one, I know I talked about this last week already. I deleted everything to kind of clean it up a little bit. But on the 20th, so almost a week ago, we took out the current monthly low. And then that Wednesday also took the previous day, right? That Tuesday low out. So we still had that gap. And of course, like the January 13th highs on the table. And then these highs up here that are still relatively clean on an hourly chart. That's still upside. So to me, right, go back to the basics. What did the basics say? What are some of the basics? I really should have this as an image, but it's okay. I'll just do this. Quick and dirty for you. Equal highs or low resistant highs, make for an easy target. and a lower low makes for a good what? Stop. Right? So equal highs, low resistant highs, that makes for easy targets. High resistant lows, right, make for an easy stop loss. So when we look at the overall, right, in this entire range, yeah, working within this sucks. Okay. Being near that 50% sucks for most people. And on those smaller time frames, it's going to be, you know, sweep liquidity back in the range, right? However, these highs up here, right? And that low being the monthly low being taken out and going back into the range, that then to me tips the scales for the not the guarantee, but for the favor of, well, we have these highs, we have multiple sets of highs, and we already have that low that's been taken. So now, again, it ain't going to be like, you know, 90% that's going to go higher. I just think it's the scales are tipped more so in the favor of upside versus downside. Long-term indices are usually bullish anyway, so if we add that in the mix, we're just a lot more likely to go higher than we are to go lower. So there's your indicator settings. Okay. There's your special indicator settings for bias, right? And it's, well, it's that easy. Okay, it's that easy. So there's your 830. We do trade lower, right? We trade lower initially to go higher, and it has been a bullish day. Probably going to be an up close day. And yeah, there's more hindsight for you. Okay. There is more hindsight for you. Here's some more, right? Here's some more, I don't know, some more shit for you. If you remember our gap, right? If you remember, how do we treat gaps? That's probably true, Adam. That's probably true. How do we treat gaps, chat? Matter of fact, what is a gap? Let's talk about that. What is a gap? Better yet, what is the difference between a gap and an imbalance? They're both inefficient. They're both inefficiencies. But what's the difference? Mason said there's zero trading in the gap. Slowly said time. Not necessarily. Great answer, but not for this one. What is the difference between a gap and an imbalance? So Mason got part of it right. But that answer still has an imbalance in there too. Partially correct. Right? There's no trading inside of a gap. Jorks, thank you. An imbalance is one-sided trading, or it's not one-sided exactly, but it's a lopsided amount. It's price delivery, okay? And price delivery is heavily sided on one versus the other. That's what makes it an inefficient market. That's why the algorithm will refer back to them, because it will refer back to inefficiencies to then make them efficient. Again, that's why it's not supply and demand, because the algorithm is referencing these things and moving price. Okay, so just so we're all on the same page, Jork said it very plainly. An imbalance is one-sided trading, or I would say lopsided trading. A gap has no trading at all. If you go back to, I think, Friday's live stream or Wednesday's live, I can't remember which one. It was sometime last week. We talked about a balanced price range, right? I hope so. So when you have a gap, you have no trading at all. When price trades, let's say we gapped lower, went lower still, and then price traded higher to the upper end, right? So we see here buy side price delivery. Buy side price delivery. I mean, there's some sell side, sure. But generally speaking, this is buy side price delivery. Right? So if let's do this a little bit more properly then. Okay? If we have zero delivery, okay? That means we have no buy side, no sell side. There's a gap, right? There's no buy side. There's no sell side. I know the circle is off, but I'm encompassing the entire gap. Okay? The entire gap. There is no buy side, there's no sell side. When price, because again, we gapped lower and then continued lower. When price trades higher, okay, and trades from the low end up to the high end, okay, again, the circle is just, it's not exact, it's for representation, okay? We have buy side price delivery, no sell side price delivery. Does that make sense? At least not, again, there is some delivery lower, but in a general sense, it's still lopsided. It's buy side price delivery, and it lacks, instead of no sell side, I would say it lacks sufficient. Oh, I can't even spell that word. No way I got that right the first time. I'm totally kidding. I knew how to spell that from the beginning. Okay, so it lacks sufficient sell side price delivery. Right? So moving forward, right? Oh, fucking magical. Right? Fucking magical. We trade above it and then we offer what? Sell side, baby. Sell side. Look at that. Look at that. See that? Look at that. That is what we anticipate. That's what we expect. No. Let's move this over. Clean this up. We'll extend that over too. Okay? No buy side, no sell side. When we go from the low end to the high end, we have majority buy side, sell side inefficient. We trade lower and then magically, right? Randomly, look at your fucking indicators, look at your volume, look at all that fuckery. Okay? And it just so happens to trade right back specifically to the open of Sunday's gap to deliver sell side, right? And then magically we go in the direction that I told you last night. Wow. 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 Crazy shit. Saw a video posted today. Don't or react. Don't predict. Well, yeah. If you can't predict price, then you probably shouldn't be trading. Honestly, that's crazy to me. Every trade is a prediction. If you're long, you're predicting it's going to go higher. If you're short, you're predicting that it's going to go lower. Anyway, critical thinking and all that shit. We've lost our ability to think critically. That's okay. That's okay. You don't have to be like everybody else. But anyway, do you guys understand now? At a minimum, you know the difference between a gap and an imbalance. You know how to treat gaps, and they won't always do this like perfectly. Okay, but we've gone through this before. You had this in your notes from I don't know how many years ago. We lack both. We get one. We get the other. Once it becomes a balanced price range, now we're going to seek opposing liquidity, and we have, like I've already talked about, these highs up here, and then that higher set still at 123, which we really have to zoom out for. That's okay. The map's not the territory. You got to zoom out, right? We still have those highs up here. So there's still liquidity there. There's still doomsday traders that want to be short. There's still doomsday stuck on the fucking news. Oh, we're going to civil WAR and all this bullshit. Okay, short the market then. Fucking short it. Put your stop right up here. I dare you. I dare you. Short it wherever you'd like. Put your stop at 123, please. Do it. Go ahead. Go ahead. Good job, Cameron. Good job. Anyway, continuing on this idea of gaps. Remember what I just told you over here? A gap is neither. We get one side, then we get the other, right? We just went over that, right? Okay. So let's come back. What do we have from Sunday the 18th and the 16th? Let's investigate. Let's put our thinking caps on for a minute. Do I look at fundamentals? Not really. Not really. Maybe to some degree, but not really. Okay. I think it's snapped to the right. Okay, gosh, that was a lot of work. All right. That gap here. See that? What just took place? No buy side, no sell side. From here, that gap did respond on Wednesday. Okay. So we get to the high end of it, back to the low end. We randomly just stop there and trade higher. It's crazy to me. And nobody would ever know that. But anyway, we trade outside of it, back to the midpoint a couple times. Then we finally get through it, right? So what do we have? Majority buy side. And then our Sunday's gap was to some extent sell side delivery. We take out all those lows. How far can price go below a low? Actually, I'm going to keep that 50% there. How far can price go below a low? An imbalance. Right. What's that right there? Bang. See that shit? Also, we still have the same range here. We dipped back into a discount, dipped into a discount, dipped into a discount again. And if the market is bullish, right? I told you that what? After we leave the discount again, 50% can be its own discount. Look at that. Look at that. More indicator settings for you, baby. More indicator settings just for you, baby. That's fucking wild. These same rules still apply. Same rules still panning out. You guys like me, right? Giving you the indicator settings, right? Don't you love this shit? Don't you just love it, baby? Come on, this is better than crack. I wouldn't know, but I'm assuming that it's better than crack. Okay? Yeah. Anyway, there's your range. 50% discount, 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 and then if we are bullish, 50% is going to be respected. So just more I fucking told you so. More I told you so. Crazy. Crazy, crazy. So anyway, I really don't have much else for you. Seriously. Learn the rules, follow the rules, and you'll be blessed. Seriously. All these little nuances, these tips and tricks, if you will. This is how markets are coded. This is how they operate. This is why it's not supply and demand. Price, if it was supply and demand, price would be erratic and unpredictable. It would absolutely be unpredictable. Nobody would ever know. Because all the people that had, let's say, highest accounts, right? Like if they have the most volume, that they could just come into the marketplace and control it every single day to how they wanted it to. They could run whatever lows they wanted. They could run whatever highs they wanted. You know, they would act in a manner that would be unpredictable because they would move on purpose to not be tracked. Does that make sense? Like if you're going to be a criminal, or if you're going to, you know, do some shady shit, you're going to be smart about it, and you're not going to, like if you're going to rob a bank, you're not going to hit the same bank twice. Or you're not going to go in a direct line across the United States robbing certain banks. You know what I'm saying? Because you'll be too predictable. The FBI would know, okay, they're going to hit this bank next because that's in the direction that they're going. That would be fucking stupid, right? That would be utterly retarded. But yet, okay, you see the same shit in the financial markets printing all the time. You still see market maker models panning out. You still see imbalances below lows panning out, right? Imbalances below lows being met. You still see 50% act as real support and resistance in specific scenarios. You still see markets sweeping liquidity. You still see inefficiencies being delivered on both the buy side as well as the sell side before going in its intended direction. So if they keep repeating over and over and over and over again with a high degree of predictability, then it can't be supply and demand. It is too predictable to be random. If it was random, we would only get it right about 50% of the time. I'd be right 50% of the time. I'd be wrong 50% of the time. Same with you. You'd get it right, you'd get it wrong, and it'd be about 50-50. Just like a coin toss. You toss a coin 100 times, 1,000 times, 1,000,000 times. The higher you go, the closer that statistic is going to be closer to 50%. Period. Because it's a coin toss. Coin toss. I have not woken up today. It's 50-50. Well, roughly, because there's a little bit more weight on the head side versus the tails. But you get what I'm saying. If that coin was smooth on both sides, it was a perfect, well-designed coin, and the flip was, you know, it actually had some force to it, then yeah, it would be closer to 50-50 over time. But yet, the things that we look for are not. Right? If we wait for liquidity to be swept and then we wait for it to trade towards opposing liquidity, we're gonna be onside way more often than we're not. Do all markets move like this? Well, I'm not going to tell you. You let the charts tell you. You go look at gold. See if it doesn't do the same shit. Go look at stocks. See if they don't do the same shit. Oh my God. Silver is 100 and... Dude. Oh my... What the fuck? 113? Christ. Not in a bad way. But it's just like, dog. We're still getting 10%. It used to take 4 months to get 10%. And now we're seeing 10% in like 4 hours. It's disgusting. I think our volatility right now is a little bit different as per usual, but it's still going to do the same stuff. All these lows in here, right? When the market traded below that, how far below those lows did it go to? The next available gap or imbalance. They're still classified as inefficiencies. How far did price go to? Right to the gap, not beyond it, body staying inside of it before going higher. Do they do the same shit? Let the markets tell you, bro. The markets will teach you more than any individual ever will. I mean, I can teach you quite a lot. Quite a lot. But again, you will still learn more from your own charts. No, I got out of silver already. It pains me to say that, but yeah, I got out of silver already. So the 1 year it decides to do some mental, or not mental, but like some Olympic gymnastics. Yeah, I got out a little bit too early. Still a good move, but the 1 year in its entirety that it does something that it's never done before. I caught a part of it, a lot of it, but not the whole thing. So it's okay. I told you I don't always get it right. I don't always try to pick the high either. And even if I did, I would have sold at 100 anyway, and I would have missed the rest of this. So it wouldn't have been, you know what I'm saying? I'm not trying to be perfect all the time. Okay. I'm not trying to pick the very high or pick the very low. I'm not trying to do that. And the majority make, so I want to read this out loud, John. It's either John or Johnny. I can't tell. I've been viewing a lot of your YouTube videos and the majority make perfect sense to me. I just have to work on training my eyes to spot it on the charts. Sometimes it'll go over my head and I'll miss it. Look, I have been doing this for a long time. Okay. This is second nature to me. Okay. I probably know price better than I do English. I don't know if there's a way to test that, but it's probably lopsided. There's still a lot of words I don't know, and I'm not the best writer anyway, so who knows? But getting to a point of a very high level of understanding in any field is going to take a long time. Years and years and years. Okay. The MLM industry, I got to shit on them again. I'll try to keep it light. But there was this common phrase, oh, it takes 10,000 hours. Right? 10,000 hours and you'll be whatever expert at some shit. And that's actually wrong. It's not 10,000 hours. That study was done on, like, I think it was violinist, some really crazy violinist, right? It was like a group of them. And that study was done on them specifically. And it was like the average number of hours that they put in to be really phenomenal violinists. But at the same time, you and I could spend the same 10,000 hours differently. You remember how over the last like 4 weeks, maybe 6 weeks, I've been telling you, everybody knows how to read. Everybody doesn't know how to read well. The difference is like literally night and day. You could read a book, not know shit about what it says. I could read a book and tell you probably a lot if I do read well. And that reading well will probably take longer than somebody who just reads a book, because you're going to skim through the page. You're going to read the words, but you're not going to pause to reflect. You're not going to underline or highlight or look up words you don't know and try to understand the author's message specifically and look at the propositions and all this other shit. You're not going to do that work. You're not going to do the deep work. And that's the difference. So when they used to say, oh, it just takes 10,000 hours, that's fucking wrong. It's 10,000 hours on average, roughly, for these oddly specific, obscure violinists at a high level of deep work. So if you're just going to take it casually, then it's going to be more like 30,000 hours for you, 40,000 hours for you. Who has time for that? It ain't me. You tell me, oh, John, it's going to take you 40,000 hours to do. I ain't doing it. 40,000 hours. We don't have time for that. Even at, I can't do math chat, but even at like 4 hours a day, that would take you 40,000 days, right? Or 1,000 days. Anyway, quick math is not my specialty. It would take too damn long. So it's not about the time that you put in. It's about the level of intention and the level of depth that you put into a subject. That's what matters. Okay? So you could come on here, listen to me bullshit for 30, 45 minutes a day, 3 times a week for free. And then the member only ones on Fridays. Okay? But that's only information. You're getting information. You're probably getting some level of experience because you're seeing what I tell you in the Discord. Oh, he's bullish, and then bang, it goes higher. But it's like, okay, did you watch that pan out? Did you look for opportunities? Did you study the open? Did you look for, some sort of, mitigation or some sort of entry technique, right? Like, what did you look for? There's a mitigation right there. We trade through it at 820, and then our equities open was the mitigation right there, right? All of these lows in here. Price rebalancing, right? Taking out traders, rebalancing at the same time. That's SME. Smart money efficiency, right? There's no such thing as perfection, but yet it perfectly hits that low and a little bit beyond it. Okay. And then what manipulates typically mitigates. You know that already. Bang. There's your mitigation right there. You had the bias. You know the model. Wow. Wizardry. Wizardry. Am I Harry Potter, dog? Am I Dumbledore? If you say I look like Dumbledore, I'm fucking banning you, by the way. It's not time travel. It's not wizardry, bro. It's know the rules, follow the rules, dog. Simple. May not be easy, but it is simple. So, do the work or don't. But it takes time, and not just time by itself, but it takes time with a deep level of intention and focus and course correction. Meaning you're going to get it wrong. You're going to take losing trades. You're going to get the bias wrong. And you got to go back and say, well, what did I miss? What did I get wrong? Well, I missed this on the daily. I missed this on the weekly. I mistimed it. I didn't look at, what time it is or what day of the week phenomenon or gaps and balances and liquidity sweeps and market maker models and yada, yada, yada. Macros as well. We even go macros today. That's fine. I'm not going to go over everything every single day, but just know, like, learn how to do this shit. Learn how to think critically. You know what I mean? That's it. So if you guys don't have any other questions, the last two things I'm gonna tell you, or at least the one. Yeah, I'll tell you at least one more thing, okay? Earlier I talked about how yesterday I finished, some of you came on here late, so I'm gonna go over this one more time, but just really quickly. Yesterday I finished Amusing Ourselves to Death by Neil Postman. This is really good. It came out in 1985. And it's about television and how culture has changed because of television. I read that one second. This one came out 7 years after, but I read this one first. And I finished it this year. This was the first book I read this year was Technopoly. Same guy, Neil Postman, which is really solid. Both of these are really, really good. You could probably read them in order. I think Amusing Ourselves to Death was a little bit better, but they're both really, really solid. Book of the month is How to Read a Book by Adler and Van Doren. This is your last week to finish that up. And then next month is How Successful People Think by John C. Maxwell. Very short, very concise, very great piece of work. We're going to have a members only live stream on Friday, which is a discussion of that book. Welcome back, 2020. Which is a brief discussion on how to read a book. And the last thing I have for you is I got to share this planner with you again. I'm actually using a planner this time. I got some notes on here. Okay. This planner, I shared it on my Instagram story. Okay. And this is amazing. It's a German brand, like Fahrenheit or something. It's not Fahrenheit, but it's something close to that. And it's a really expensive brand, but it's wonderful. Bro said my visa expired. Hey, look, man, ICE is not fucking around. You know, I won't go into all that, but just know the FATFO scale is just as true today as it was last year, as it was the year before that, and the year before that. So, you know, all I'm saying is if you fuck around, you will find out. Okay? That's what I'm going to tell you. Be careful, right? Make good decisions, chat. Make good decisions. There it is. Bang. Okay? This is the... Hold on. I want to make sure there's no... Okay, it's fine. It's Leuchtturm 1917. Leuchtturm 1917. So there it is. There's my pronunciation. I probably chopped it. But it's really solid. I like it. One side is Monday through Sunday, and the right side is like notes. So it's like, oh, here's what I have to do. Here's how to do it, or specific times, or you know, stuff like that. And it's great. So if you do not plan your life, something else will. You know what I mean? If you don't manage your time, someone else will manage your time for you. And I promise you, you do not want someone else to manage your time. Okay? Someone else managing your time means that you are not free. You might be partially free. But if you let other people take advantage of you, they will. So, plan out your time, be organized, and make good decisions. And that's how I'm going to end the stream. So, y'all be good, be blessed. We will be here tomorrow the 27th for another free live stream, same time, same place, for the same price. You know what I mean? So y'all be good. I'll see you tomorrow.
Sound of goodbye, whisper like a confession. We moved in silence towards separate destinations.